Big news out of Washington. President Donald Trump just rolled out a new major tariff plan, and it's even tougher than expected.
This morning, a historic escalation with President Trump launching his largest tariffs yet. The tax on imports affecting everything from clothing and computers to TVs and toys.
This move is set to shake up the global economy, the stock market, and possibly your wallet. The White House is calling it Make America Wealthy Again.
April 2nd, 2025 will forever be remembered as the day American industry was reborn, the day America's destiny was reclaimed, and the day that we began to make America wealthy again. We're going to make it wealthy, good and wealthy.
It's all about reciprocal tariffs on 60 countries.
Reciprocal tariffs on dozens of countries the White House says are ripping the U.S. off most.
That means they do it to us and we do it to them. Very simple.
So let's break it down. How does these tariffs work and what does it mean for you? Under this plan, the baseline tariff will start at 10%, but it has the potential to climb much higher based on the tariffs these other foreign nations charge the United States. President Donald Trump simply puts it as America will charge these foreign nations roughly half of what they charge us.
So here's what's included in the tariffs. At least 10% on every American trading partner. Countries that Trump terms the worst offenders will face higher tariffs, and that includes 54% on China, 24% on Japan, and 20% on the European Union.
Trump argues that this strategy will usher in what's called a golden age of America, revitalizing domestic manufacturing, creating jobs, and leading to economic prosperity.
The president insisting his tariffs will return jobs and factories to American soil.
We will supercharge our domestic industrial base.
According to Trump, these tariffs will push production back to the U.S. soil, ultimately increasing competition and theoretically reducing prices for consumers in the long run. But in the short term, there is a debate whether these prices will go up before they go down. In my opinion, they will. Some experts, including the Federal Reserve, suggest that these tariffs will trigger transitory inflation. Because when businesses importing goods face a higher cost, they either absorb that loss or pass that extra cost on to consumers. That means, at least initially, prices could rise for a wide range of products. The stock market is already reacting, and we could see volatility continue as businesses adjust.
Those new 25% tariffs on imported vehicles also now in effect.
The White House has already implemented a 25% tariff on foreign-made automobiles, and additional tariffs are expected to roll out rapidly. If other countries like China decides to reduce their trade barriers, the U.S. might follow suit. But if they don't, we could see escalating trade tensions, which could lead to a full-blown trade war. A key point to consider is the potential for negotiation. According to the administration, the purpose of these tariffs is not just to collect revenue, but it's also to pressure other countries to lower their tariffs on U.S. goods. So what does this mean for investors like you and me? Well, tariffs creates uncertainty, and uncertainty can create opportunities. Step 1, cut through the noise. Political and financial emotions run high in moments like this, but savvy investors stay focused. Step 2, have capital, dry powder ready. When the market swings widely, those who are prepared can take advantage of discounts. Step 3, know where to put your money. For most investors, passively investing through exchange-traded funds and index funds remains a smart strategy. So with these tariffs, where will the money flow? Well, if production moves back into the United States, companies in construction, logistics, raw material like steel could see significant growth. Also, data centers and energy providers might also benefit from this artificial intelligence boom. Listen, these tariffs will continue to evolve. Your job as an investor is to stay calm, cut through the noise, and focus on long-term opportunities. Let me know your thoughts in the comments below, and I'll see you in the next video.